Okay, so hello and welcome back guys to the channel. And in this video I'm gonna be talking about the right order blocks or supply and demand zones as we know them, how to pick out the right zones to trade from in the smart money space of trading. So this video is all going to be about this. Write down the right order block slash, I just put the slash SND zone, right? Yeah, there. So how to pick out the right order block or supply and demand zone that you want to trade from as a smart money trader. Yeah, so in the chart right here I'm having BTC USD. This is a Bitcoin chart. We have like November till February price action. This is the 4-hour chart, and yeah, so I'll be breaking this down on which trades that I myself would have taken, which trades that smart money traders would have taken, and why would have they taken those trades, based on supply and demand, or these order blocks as well as structure, right? Because we know that we have the three main things that have always been taught in this channel, in other channels, in the whole smart money space, right? We always use the three important things, which is structure, S&D, and confirmation. Well, I'll just like note down for you guys. So we have structure, S&D, and confirm. So these are the three things that we smart money traders always use them, right? So without wasting time, and let's just get straight into today's point, right? So we had this price action that was pushing bearish for a long period of time until here when we start to see these structural shifts. So I'm gonna start from this downtrend, that from this was the highlighter, yeah. So from here where this downtrend started, right, from that highlighted zone up there until here, or maybe if the video is gonna be short, I just like to make these short, so I might push a little bit. So okay, without further ado guys, let's continue. So in this price action here, we can clearly see that, okay, so price was pushing bullish, and then all of a sudden it failed to break this high, and then it started pushing bearish, where we had this as our major structural break, or what these people call it change of character nowadays, something like church. Yeah, so this was the main structural breakpoint that marked the beginning of the downtrend. Now, following this downtrend, it means that from this high right here, we have this low. We have this low here that comes and forms this high, right? No matter how small these moves, they matter, right? And after that, after this, so the market started forming a series of lower lows and lower highs. So this as our lower low and this as our lower high, right? Following was this as our lower low, which, by the way, did what? It broke structure. Yeah, so we are only gonna be following the institutional order flow, and as we know it, we will only be dealing with structural breaks, right? And if you don't know what institutional order flow means, then go to the previous videos and check out the institutional order flow video and the other order flow videos that have been posted previously. So what what to know about the right S&D zone is that it should contain some things, right? This zone that we want to depict as the right zone, it should contain some things within it, right? So in the smart money space, we say that the right OB should contain the following things, right? Well, at least, well, how I like to teach them, like the right order block should contain um, um, price gaps, right? So we call them price gaps or imbalances or inefficiencies or whatever people call them, right? But it is what it is. I call them imbalances or inefficiencies. Below or above it in their respective manners. So if it's a bullish order block, if you want to buy from that order block or demand zone, then it should contain price gaps or imbalances above it, right? So that when price comes to test or mitigate that zone, it means that it would have come to clear the inefficiencies that were left above that zone, and then mitigate the zone to just fill in the orders that were left behind, and then trigger the market upwards. But if it's a bearish order block or supply zone, as these that we're seeing right here, this little up candle before this little up moves before the down moves, then they should contain imbalances below them, right? And if you don't know what imbalances are, go to the previous videos and check out the imbalances and mitigation video, and that will help you a lot. You'll get the full picture of what I'm talking about here, right? So without further ado, let's continue. So the right order block should, I mean, it's not necessarily 100%, but a lot of times, if you want to be right on that move, then there should be inefficiencies or imbalances below that supply zone and above that demand zone, right? So so let me show you what I'm talking about, right? And notice something, right? Nothing really ever happens in this forex market, right? It's not that everything always happens. Sometimes there will be neglections, and sometimes things will happen just like the way I say they'll happen, right? And that's how we deal with this market. That's why not everyone is a trader, because you need to have extra understanding. Otherwise, just everybody would be just tapping that buy, sell, buy, sell. And I mean, this whole thing doesn't really work there like that. So let's continue. So it should have what imbalances, right? That be imbalances, right? Above or below it in their respective manner, as I said previously. And also it should be unmitigated, right? A zone that hasn't been tested or retested, right? So you understand this more clearly when I'll be giving you live examples from the charts rather than just writing unmitigated, right? Unmitigated. So there. So these two things are the key things to you picking out which zone you should most probably go for, right? So, and one thing to notice is that not all zones will be tested. Others will be neglected and be tested in future, right? And others will be tested on the spot before price continuations. So when we had this breaker structure here, right? So we had several zones to trade from, which one was here, right? So one was there. So this was the first one. And then we had this right here as the second one, right? And notice what happens, right? This right here is a perfectly clear order block or supply zone. it has inefficiencies below it, right? There's price gaps right here. If you don't know what I'm talking about, go check out the imbalances video, you'll understand. It has imbalances below it, but price doesn't come to fill them, but instead price just leaves, right? Meaning that not all of these will be tested, right? Because the momentum in this market was too high for price to come all the way up here. The bearish is the bearish volume in this market was too overwhelming for the bulls to take the market up here, to mitigate their orders, which were left behind. So this means that if price does this, it doesn't mean that this right here will be neglected. No, it has been neglected for now, but it will be mitigated within the future price action, right? So order blocks have this tendency of being mitigated either with recent price action or with future price action or very, very future price action. And we'll come to discuss more about that in the next videos as the channel keeps growing. So the one that was tested was this one, and then price came again to break structure, and notice what happens, right? Price breaks the structure, but it leaves behind these S&D zones, right? And as I told you before, they're not always going to be perfect, meaning that they're not always going to be having imbalances below them, right? As you can see, of course, yes, there's imbalances here, right? There's tiny imbalances here, but the zone is way up here and price comes and taps it, meaning that it did fill this imbalance. And if you're looking for the internal wick structure or those hidden base order blocks, as I taught you before, if you don't know what I'm talking about, go back and check out the hidden base order blocks or the so yeah, there was a hidden base order block just above this inefficiency, and as you can see, price comes and taps it, right? It taps this hidden base order block, but it also taps the original last up move before the down move started, right? And meaning that if you would have taken your entry here, this is just an example, right? If you would have taken an entry there, it means that, yeah, this was a win for you. You were looking to target that low, and boom, right there you go. There you have it. It comes, it doesn't take you out, and it goes accordingly. So this shows that it holds, right? So it did hold. And let's keep following price action and look for more examples for you guys, right? So let's enlarge this a little bit. And coming to the next structural area, it means that, okay, so after this low was created, which move came to break this low, right? So as you can see, if we draw this thing, you'll find that this large black candle there, the bearish candle, was the one that broke that structural point. So so this was just the pullback, right? So this overall was its pullback, and now we have a lower high, a lower low, a lower high, a lower low, a lower high. Now we have what? A lower low right there. And where's our lower high supposed to be, right? So coming again, right? So what you're supposed to do is look for that zone that was left behind, right? The order block or the supply zone. And where's our supply zone? In this case, we only have one, and that's it. Boom. So that's our little up move before the down move started, right? And look at what price does, right? And as you can see, there's imbalances there's imbalances below it, and it was never tested until this move right here came to test it, right? So this move came to fill all these inefficiencies or imbalances left behind, yet again testing the zone itself, and then allowing for price to continue towards lower prices. And as you can see, boom, that right there was your second entry. So I'm just showing you guys how you would have taken your entries in the smart money space and how would have it turned out for you, So boom, so that's your entry right there. That's your entry right there, and price just comes all the way down here. And so let's continue following price, right? So that's your second entry, and we're still looking for entries, right? Because that's what we traders do. We always look for entries, and if we don't see them, it means that we're waiting for price to reach somewhere for us to take an entry, right? So in this case, where is our next entry, right? So we'd have done the same three-step strategy, or whatever it is, the three steps thing that I just taught you, that we always look for the break of structure, the S&D left behind, and the confirmation, right? And confirmation is done in the lower time frames, which I will not speak of, but I'll make something I'll make something of it, because it's a little bit complex, and yeah, it's mind-blowing, guys. It's mind-blowing. So its time is yet to come, but just bear with us for a sec, and it will be there pretty soon. So there you have it. So okay, so let's go back. You had your lower low, lower high, lower low, lower high, lower low, lower high. And where is your lower low right now? So this right here is our lower low. This is our lower low that broke this lower high. And so what are we looking at, right? We already have a break of structure. Now we look for an S&D, right? The zone that we want to trade from. And as I taught you, we have multiple zones in this area, right? In the case of hidden base order block, it means that you have this right here as your zone, and the original one all the way up here, right? So in this case, you have two zones. Now, if you have two zones, it means that you're gonna have to make a choice here, right? You're a trader, you know what you're doing. So you have two choices to make, right? You either trade with one of the two by picking out which one would you prefer most according to your rules and strategy, or you could trade from both of them by splitting the risk. For example, you wanna risk 1% of your account, right? And you have two zones like this. So it's likely for you to decide, right? Okay, so if price reaches this, the first one right here, I'll take a trade, but I'll just risk 0.5% of the account. And if it gets taken out, or if it holds, then it all goes well, right? And if prices to come all the way up here, it means that I'm going to risk another 0.5% to make it a total of 1% risk, right? So yeah, it is what it is, right? I'll make a video based on risk management, and we'll talk more about that. So in this case, let me just continue. So boom, and price comes to hit the first one, right? So there's your entry. Boom, so there's your entry. Your stop loss maybe just above that zone, or whatever you want, or wherever you want to put it. That's all up to you, right? So boom, so we can see that. Okay, so we're still following price, right? We're still following price. Let me put this back to auto, and let's pull this order. So boom, your take profit gets hit. Price doesn't come to the original one, even though there's imbalances below it, right? But price doesn't come. It means that this one was neglected in the near future, but will be tested or mitigated with further or late future price action. I mean, I don't know what to call it, but it will be mitigated in the long-term future. That's my point, right? So boom, so let's continue right now. So okay, so we have another break of structure, right? So we have this break of structure right here, and this structural point was broken. Okay, so boom, so we have this break of structure yet again, right? And we're just, so this was your lower low, and this your lower high, right? And now price has broken structure, forming what? This right here as the lower low. And when a lower low is formed, it means that if price is still continuing bearish, a lower high has to be made. right? Unless price is changing its direction or character, meaning that higher highs will be put into place, but in this case prices still continue bearish, so we have to look for that lower high. And where's the lower high coming to be formed, right? In this case you have multiple zones. For example, for instance, you have this as your first zone. Boom, so that's your first zone. You have this little man right here as your second zone, and probably that right there as your third zone. And as I told you, you need to pick out which one best works for you, right? Which one best works for you. If you are a patient trader, I mean, if you don't like to risk your that much percent of your account, for my perspective, you should usually be taking the original ones, which are way up there or low there, basing on the price action that you're taking. But these intermediary ones always seem to be kind of tricky, kind of risky. So if you do not like to risk that much percent of your account, you should always be patient and wait for price to make a deep pullback all the way up there for you to take an entry, just like what happened right here and right here, right? So yeah, you're not always gonna be getting those entries, but you know, patience pays, and it is what it is. So boom, so price comes here, right? Price comes here and it breaks this one, but doesn't really seem to tap this one, and then it just goes off. So there was no clear entry right there, because price just comes with a lot of momentum, breaking these, leaving all these wicks behind. But what you should have done, I mean, always patience pays, right? If price broke this one, it mean and didn't tap this one, and then what did it do? It left you with this intermediary structure, right? So you had that as your high, and this as your low, and this right here as your high, and that right there as your low. Just follow this intermediary price action and you'll see what I'm talking about. And that right there, so this in itself, just look at this. For example, if I draw it, right? So you have that, that, and that. So what is this, right? It's a break of structure. No, that's a break of structure. So if structure is broken, what should you do? It means that you have your, boom, this right here, your little last up move before the down move. It means that your entry was supposed to be here with your stop loss right above that high. So this is as simple as it gets, guys, as long as you have that understanding, right? Boom. So what you should have done was wait, and boom, lo and behold, you eventually come to get an entry right there. So this right here was your what? Third entry? Yeah, if I'm not losing count, then this is the third one, right? And let me just do that. Okay, so you're looking to target this low as your first take profit, and if you want to split that and hold it for more or long term, that's all up to you. You're the one who's responsible for the risk that you take. So boom, so there is our price action in this whole downtrend, right? And I mean, I'm just keeping this short as I said before, right? So when we come here, we start to see that, okay, so price comes and forms this low right here. Price comes all the way down, forms this low with this as its lower high, and then lower low, and then all of a sudden, boom, you have a higher high being put into place, meaning that price has started to break structure to the top side. Price has done what? Broken this structural point right here, meaning that higher highs and higher lows are now being put into place, right? And when this happens, it means that the direction of price has changed, and yet the same rules that we applied or used in here, if you come to apply them in this area as well, you will end up having the same thing as we have right here in this side of the market too. So without further ado, guys, I really hope you've gotten something out of this on how to pick out the right order block or supply and demand zone, as we all know them, and how to use them to get the perfect entries that we as smart money traders do it. So without further ado, guys, don't forget to hit subscribe, hit that thumbs up, turn the little bell on, and until the next time, guys.